And this session is going to be in a kind of more of a Q&A format. So basically, we've just proposed a few questions that we got from people that we asked, and I'm just going to present them to Simon now. So Simon, I'll start by saying thank you for joining us today. And can you just give us a kind of a sense of how you see the residential market at the moment in Ireland?
I will, of course, Nick, and I'm going to actually share a couple of screens here as we go, guys. It's nice to meet you all, first of all. And basically, to jump right into it, we're very bullish on the residential market in Ireland. We've all seen a big bounce coming here out of COVID. We're particularly focused on Dublin, Cork, Galway being the big economic capitals. And essentially, property markets are connected directly to the success of the economy, and we see Ireland being very successful economically, and that continuing to feed in new net demand for more apartments, more houses, and more opportunities in the residential sector. So we're very bullish on it. We're all aware of the politics around it. It's complex, and I suppose maybe some of the questions here will help unpick that. But essentially, we see it as a great place for us to invest, buy great property, and make some good returns.
And what do you see, Simon, as the key drivers for the future, and kind of what's the outlook for the market?
Yeah, we analyze Ireland, Nick. I'm going to share a screen here, actually. We think about it, we keep it kind of simple, and very much we think Ireland's growing economically, and that growth is coming between people having fantastic jobs, and those jobs delivering high salaries. Get my screen right here for 1 second. We track the CRO, for example. I'll go mistake. Actually, I'm going to stop sharing now. I'm making a mess of that. I'll come back to it. So essentially, I mean, Ireland's 5 million people at the moment, Nick, and we see it growing, as does the CRO, to 6 and 7 million people. We've all got big families, a lot of young people around, and that's driving demand, as well as net immigration into Ireland as the multinationals bring in more people from overseas. So we can all see in the papers there's a squeeze on property. There's not enough of it supplied at the moment. It's a real challenge as a developer, as well as buying and investing in residential. We also try and develop it, and there's a real bottleneck to getting it developed, and that's what's pushing up prices at the moment. So the GDP growth story continues for Ireland, and so does this residential growth story, we think.
And if people want to invest directly, Simon, what things do you think that they should consider?
Yeah, that's kind of, so I have loads of experience on that, Nick. Great. I have some fantastically positive experiences at the personal level, and I suppose my background here to people, we're 30, 40 years in the property business, both commercial, residential, owning, investing. Sometimes we've been pure investors, like a person buying an apartment, and sometimes we've been developers developing, 400 or 500 apartments. So my own experience of direct ownership was, net, it was quite frustrating. It's complex, expensive. I was a pretty bad landlord at a personal level on a one apartment. And I've always viewed it as being the way to approach the industry is to take it like a profession. It's like any job we all do. If we approach it professionally, we can be better at it. And in RQ2, that's what we're doing now is, we've got a range of commercial properties. We've got a whole team here around rent collection, asset management, legals, and plugging apartments into that model works really well. And I guess if someone does it themselves, they could make it can be a part-time business, but I think most people are probably too busy in their day job to really want to own a single house or a couple of houses rented to a tenant or students and deal with the risks of the Residential Tenancies Board, the tax, and the kind of regulation around it. So I kind of discourage individuals and encourage us to kind of cluster through organizations, whether it's a public company or a kind of a group investment scheme, or what we're promoting here with you, Nick, which is the idea of maybe getting more directly into a small number of apartments as a group of investors.
I'm conscious some people have just joined the call, and this has been videoed. So if anyone does want the full video after the event, myself and David Looney, who's on the call as well, will be happy to share that with you. Simon, I know some of the people on the call today are investors themselves. They're kind of these almost accidental landlords. Some people are looking to buy property for investment, and some people are thinking about whether or not they should sell. Where do you think Irish property and residential property particularly should sit in an investor's strategy?
I think it's, we're all we've all got the bug, I think, in Ireland. I mean, not everybody, obviously, but it's part of what we do. I think we love property as an asset class in Ireland, and we all know maybe 20 years ago it became too dominant. So I see residential being a really important part of a general property portfolio. What we do in RQ2 is we enable people to maybe get involved in large commercial properties, a little bit of development sometimes, and residential now with our new residential opportunity. And we think if people were approaching it, maybe 20% of your assets should be in residential property, or 10, maybe the same amount should be in commercial. But there's plenty of room in people's portfolio for Apple stock, Tesla, and stocks and shares and bonds like that as well, because we all learned, I suppose, or we've learned over time, and I'm sure you're advocating with your own clients, that diversity protects you from any kind of blip in a particular market. And once you can stay in a market for over enough time, you tend to get, whatever down cycle there is a good recovery in the upside. So spread is the answer. But I think if someone had no residential and was reluctant to buy an apartment because it's hassle, I suppose what we're trying to do now is giving them an opportunity to get involved with us, take the hassle off the table, but still be exposed to the sector.
And if I was an investor, Simon, that had, say, 2 or 3 residential investment properties, say down in Cork, which is where I'm based, what would be your view? Should I sell? Should I hold? Should I acquire more? Like, where would you sort of...
I think that's a personal question for everybody. So where I've had 2 or 3, I chose to sell mine over the years, and because I found I was not doing a great job on them, because it was part of, I'm running a day job, obviously. So I found owning a certain number became trouble. So I wouldn't say everybody should sell them, Nick, but I'm thinking being an amateur landlord is like being an amateur anything. It's got challenges you mightn't consider, including your own time, including the cost of filing returns. And I know at a personal level, when people own property directly, the tax system is kind of tough because it goes into part of your income tax return where you're paying maximum tax rate on property. Whereas what we do in RQ2 again is we have access to kind of corporate structures where we can create more tax efficient ways of holding the exact same properties, and giving investors access to capital returns rather than income tax and ideas like that. And as we scale up our access in this market, we'll get further access over time to some of the structures that the Cuckoo funds and the Vulture funds are using around ICADs and similar, where you can create pension style gross roll up vehicles in the future. So I think the system's a bit against the individual. It's tougher on the individual, and I'm sure anyone who owns 2 or 3 is feeling that. And I guess it doesn't mean they should sell it, but maybe if they're expanding their portfolios, they should look at what we're doing and consider it as an option.
Well, yeah, I'd have to agree, because I have clients who, for example, they're in receipt of rents, and rents are quite strong at the moment, obviously, as we know. The key thing I keep reminding them of is that as high rate taxpayers, which the vast majority of them are, they are suffering tax typically at 52%.
Yeah.
And the problem for them is that some of them have loans against these properties. So by the time that they pay the loan and the tax, they're actually just facilitating someone living in their properties. And it's not quite as attractive, especially when you take into account the maintenance that goes with it. So certainly, personally speaking, I wouldn't be a massive fan of people holding too much direct commercial residential property at this moment in time. Simon,
I help you, Nick. The leverage is a hurt there, because to buy an apartment in Dublin is going to cost you 300 to 500,000 euros. So most people have to borrow a lot of money to do that. And as you say, they may be getting a net exposure of their equity of, call it 30 or 50,000 euros. And they're doing a heck of a lot of work and taking a heck of a lot of risk with the banks and leverage to get access to an apartment. So we'd be very much encouraging lower leverage exposure, more efficient tax structures, and kind of working in our opportunity corporate kind of fund structure to give people a better way of being involved.
I should have asked you earlier, Simon, but I know some people are worried about a change in government, and without sounding political, there's a concern about potentially Sinn Féin coming into office. Can you just share with us your thoughts on that?
I suppose, there's a funny one here, Nick. There's a TikTok, I don't know if anyone's watching it around at the moment, and they're doing a citizenship test for these 2 guys from Poland, and they ask who are the 2 most important political parties in Ireland, and the answer is Facebook and Google. So I think Ireland's driven by economics, and every party in power is driven by continuing to grow Ireland as an economy. There's a different style between Sinn Féin, Fine Gael and Fianna Fáil, but essentially I think whoever we get in power, they're going to be advocating for good jobs for young people, good housing for young people, and maintaining the backbone of the Irish economy, which is multinational investment in Ireland. I don't think anyone's going to challenge that and be electable. So I'm not afraid of any government. I'm sure there'd be new regulations which have to be digested by the property industry, but we've been through 35 years of different governments, and regulations have changed all the time. And again, our job as property professionals is to roll with the regulation as opposed to resist it. So whatever comes, ultimately the market's being driven again by demographics and by economic growth, and I think those things are permanent and consistent, hopefully, as Ireland continues to grow. So it wouldn't be a worry. It's just a thing we'll have to deal with in the future.
What about people who are looking to maybe purchase abroad, Simon, thinking that there's more opportunity, you know, in some parts of Europe, like
Yeah,
maybe London or Paris?
I mean, so I think, and this goes back to everything I do in property, Nick, you'll know from the commercial side, like we only focus on what we're really good at, and we're really good at commercial property, residential property. We're very good in the cities and urban areas. You know, we're not good in Birmingham or Belfast or Manchester or London. I love going to London. I'd love to imagine I could own some of it, but I know I'm a total outsider in that market, and whereas I'm a total insider in Dublin. And I think the knowledge that we'd all be, the stories in the past, people going overseas and seeing great value. I was actually in Ukraine a couple of weeks ago, and you can buy a 2-bed apartment for 60 grand. And as a property guy, I'm driving along going, yeah, I might buy one of them. That could be interesting. And then my common sense brain kicks in saying, I don't want an apartment in the Ukraine. What am I thinking about? Let's move back to Dublin. You know, so I think it's really dangerous. If you want to live in it and have a great time and retire, and as a holiday home, it's perfect. But as an investment, you know, once you go outside the Irish regime, you're into different tax rates, different regulations. It's a real recipe for potential disaster for any of us. So I'd avoid it.
Okay, and then I suppose the $64 million question, Simon, is what opportunities do you see that maybe others might be missing? Where is the opportunity?
So this is where, you know, there's a particular opportunity I'm working on at the moment. Nick, you're familiar with it. I might actually, I'll get my screen share working for this one. But what we're working on at the moment is this concept of...
Actually, this is something that you forwarded on, Simon.
Yeah, I'm going to share it up here a little bit. So essentially, we've been looking at the market here as to what we think we can do that's different to the rest of the market. So we're all seeing the large institutions are buying and developing huge 1 to 500 apartment schemes, and they're essentially ignoring the older schemes that we would have developed maybe 10 or 15 years ago. And we've identified excellent value in the likes of the Beacon here in Sandyford and in Spencer Dock and in other schemes around Dublin. So we're putting together a portfolio of maybe 10 or 20 apartments. We've bought the first 2 here on this, and we think there's going to be a fantastic opportunity taking this portfolio of, you know, 10 or 20 or 30 apartments and packaging it up for on sale into these institutions at the higher rates. So that's kind of where I think we've a unique angle that other people don't have in Dublin, because most of the big pension funds can't go around picking off apartments in the blocks of 1, 2, 3 or 4 or 5, and they pay such a premium for 200 and 300. Then it kind of looks crazy when we read about the paper, and it's a classic arbitrage opportunity where, as nimble operators, we can pick off this better value product, roll it up together, and package it up for an on sale for, you know, a cheaper amount of 10 or 20 million and make good yield and good return. So that's what I'm working on at the moment.
And Simon, I just threw up the screen there, which hopefully people can see. Of those 2 apartments that you referred to, the one in Spencer Dock and the Beacon Quarter, could you just give a little bit more of a kind of an insight into?
Exactly, because I went off, and these are this kind of highlight. What highlighted for me, Nick, was I was looking at the market. We're developing apartments in Drumcondry. You might be familiar with, and some of your clients here could be exposed to it. And we're proposing to sell those apartments for, you know, upwards of 500,000 each to an institution when it developed in Queens and Drumcondry. And when I travel the city on my tours looking at everything for sale, I see fantastic buildings like Spencer Dock, which is in the middle of the IFSC in the heart of Dublin at 325,000 euros for a very high quality apartment. And I just think it's excellent value. And the value here is because it's being sold by a receiver, and somebody's, you know, unfortunately fallen into arrears on a loan, and it's being washed through by the receivers. So there's going to be hundreds of these apartments coming, and I think the opportunity is to buy them off the receivers as we've taken on here, and bring them through a kind of an upgrade cycle, modernize the apartment slightly, and prepare it for on sale to an institution, or possibly on sale to an occupier who wants to live in Dublin. Because if you think about yourself buying an apartment in Dublin to live in, you know, 325 or maybe 375,000 euros after I've upgraded it is excellent value for anybody working in the middle of the city. So Sandyford Beacon is the same. We think Beacon's an excellent high-class development. Sandyford, for anyone who knows it, and it will have cost upwards of $500,000 per apartment to deliver. And again, we can acquire them for between 322 in this example, or maybe 350, 360 for some of the slightly larger ones. And again, I visualize it as a kind of picking up euros for about 70 or 80 cents and creating very good income off them from a rental point of view, and then selling them on to an institution or to individuals in the future at a higher price. So very easy, sort of low risk opportunity we have because we're nimble on the ground that most people aren't seeing because it's a bit more complex and far too small for most of the big funds.
And I suppose just to finish off on that point, in relation to this particular investment opportunity, I know, Simon, when I was talking to you, that the way that it works best is that, it gives investors ability to invest at relatively moderate amounts, 10,000 being the contribution that can be made by a company, a pension fund, or personally. As you said, it's more tax effective because it's capital gains tax treatment in the personal world versus income tax. And essentially, there is no bank involved. So the opportunity in this particular instance is for this investment that we're enabling for this month, basically, that an investor can put monies into this over a 3-year period. And essentially, Simon, and you might just clarify this, they're going to receive 15% over the 3-year term.
Yeah, so that's exactly, we've tried to take all of these ideas we have around these 2 apartments, but it could be any apartment. And what we try and do, as you know, Nick, is we try and make it into a kind of easy to understand investment proposition that gives people kind of a very clear exit at the end. And the 15% growth option is a mixture of rents that are received in the properties and the capital uplift on the apartments themselves. And again, it's trying to give the investor who wants to make a 3-year timescale investment, they're not entering the market forever, it's just for 3 years. And there's a very clear way of turning 10,000 euros into 11,500 or 20,000 euros into 23,000. And underlying it is 2 fantastic properties where, irrespective of the wider economy and any kind of, COVID extensions, these are fundamentally good value properties. And the investor is protected by having the first charge on the assets and secured against them. So it's really a very low risk way of getting back into the market. Maybe someone's afraid of the market and wants to have a low risk way in, or maybe someone's looking to diversify away from direct ownership. And we've tried to make it easy to understand, easy to execute, and I suppose good for us because it's giving us the platform to go and find these great value apartments and grow the business.
Great. Well, thank you very much for that, Simon. I'm conscious of time, so just to maybe finish up, and we will open the floor to any questions if anyone does have any. Just in terms of the, I suppose, the results of the poll, it seems to be a kind of a tie between buying a property, moving home, and planning for retirement. So I suppose they seem to be the things that people are kind of maybe more focused on this particular one. I'm conscious, I know there's been I suppose quite a few people on the call today, and some people maybe listen to it afterwards. If anyone would like to ask any questions, do please feel free to unmute your mic. Simon is available, not just now, but he's happy to go on a call separately if people wish. We will provide the video to anyone who does want it, and there are some presentation slides that we chose not to use. We just wanted to make this particular session a little bit more informal. But as I said, if anyone would like to ask any questions, please feel to do so now.
Yeah, and I'll add there, Nick, I suppose, so people understand, we see this as being, we're kind of advocating or re-advocating for, people getting back into the market that might have kind of, it hurt and kind of damaged a lot of people in 06, 07, 08 when things went wrong, and we're trying to design a better way to get back into sort of really constructive, positive residential investing that doesn't, consume all their capital or put all their they're not going on personal guarantee loans and mortgages and the stuff. All the mistakes that were made in the past are kind of in the past. Hopefully everyone's